So are we finally set to see home prices decrease here in Q4 of this year? Hi, I'm Nicholas with the Iannitti Realty Group, coming at you with a real quick housing update for the month of October. Of course, I want to provide a little bit of national context here before we hop into it. We've definitely seen some year-over-year appreciation numbers now for Q2 of 2021. We're looking at about 18 to 19%. Bill McBride here with the calculated risk thinks that's probably a peak. I'm not quite sure. But this is what the numbers look like here. Definitely just staggering home appreciation. We'll get to why this really is coming out and if it's going to continue. Basically, it looks like this, though, graphically across the nation. All of these states in red have over 20% appreciation year over year as of Q2 2021, which is just crazy. We are probably set to see, closings declining here towards the end of the year. And it's funny because Ivy Selman said that basically we're on the cusp of, flipping to a decelerating trend in appreciation. What I want you to realize when you see things like this in the media, this decelerating trend, that does not mean home prices coming down. They're not going to come down, right? What we're probably going to see is instead of 18 and 19% appreciation, we're going to see appreciation more along the lines of 3 to 6%, right? Like we would in a normal market. By the way, historic appreciation for homes is about 3.8%. With all of the appreciation we've had in the past couple of years, that's actually pushed that historic average to 4.1%. But anyway, this is pretty much, looking at Pulsenomics, this is what a lot of economists out there and people in the know are really predicting over the next 5 years, right? So we're looking at, things still appreciating, home prices not coming down, again, just due to simple supply and demand. When we're looking at the cumulative change, though, through 2025, we're talking about 31% or so. I'm going to talk about that here at the end of the talk. But what about the fourth quarter? Well, typically realize that we normally in Q4 we have seasonality, right? Things tend to slow down in the real estate market. We don't see as much volume in a normal or usual market. Realize since the pandemic, we have not been in a normal or usual market at all. We actually saw mortgage applications tick up last week by 7%. These are people that are actually coming back in to the housing market to buy. So we're seeing an increase of buyers coming in. When we look at sales volume here, this is basically the blue line's 2019, orange 2020, and then here's where we're at right now in 2021, right? And you're hearing about all this talk about year over year volume being down, which is potentially true, right? But I want to look at it a couple of different ways. First of all, when you look at 2020 to 2019, this was not a typical year. We normally don't see listings like this crater, right? And then all of a sudden we had this knee-jerk reaction where things super accelerated through the rest of the year, right? That's not typically normal. When you look at where we're at, though, so far in the beginning of this year, we've definitely been ahead of the first half of last year, right? Which is good news. But really, this is what we really want to look at because 2019 is the last normal market that we knew about, and we're definitely way ahead of that here in 2021. Okay, when you look at the number of homes that sold in December every year, 2019 it was right on par with everything from the previous crash. The outlier being 2018. Okay, so what we're really talking about is what's going to happen in this green line through the rest of the year, right? Typically, let's just say it holds steady and goes straight across the board, right? All you're going to hear in the media for the rest of the year is that how volume is now down year over year, right? They're comparing this green line to this orange line. What I want you really focusing on, though, is this green line compared to where it was in 2019. We're still way ahead of the last normal market that we actually had. Okay, and what's really probably more important is where the active listings peaked, right? If you look at this trend for 17, 18, 19, this basically kind of shows you what we would expect to see in regular seasonality, right? By August, September, October, things are starting to decline, right? Once we get into November, December, things start to get real sleepy, okay? In 2020, the listings declined in April and they never really came back, okay? So when we look at the last half of 2020 from a sales standpoint volume, compared to the listings that came on the market, the difference in these two, how they're inverted, that's where we get that 18 to 19% appreciation year over year, right? It's simple supply and demand. So what we need to figure out is really what's going to happen here through the last bit of the quarter, right? Will it take one of these 2 or 3 routes, which basically would follow normal seasonality, or are we actually going to see listings continue to gain some steam into Q4 here, right? I think that they possibly can. 3 reasons why. First of all, there's a lot of pent up seller demand. There's a lot of people that didn't sell their home during the pandemic. They wanted to wait and see. Well, now they've seen more people have gotten vaccinated. They've seen prices continue and increase. And if they have a home that doesn't work for them, they're finally coming around and saying, hey, maybe this is time to take advantage of that. Okay. New construction is really starting to gain a little bit of traction. We had some hiccups here at the beginning of the pandemic with supply and labor shortages. We still have those shortages, but they're getting worked out. We're going to see more new construction continuing through the rest of this year. And then really the end of the forbearance moratoriums that we had, right? I've been talking about this for months. We're not going to see this wave of foreclosures. I told you that the majority of those people have enough equity in their home where they could just bring it to market if they're in trouble, sell it, pay the commissions, and get on with their lives. That's probably what's going to happen. So we may see more of those people actually hitting the market. Okay. The other big, part of this equation is interest rates, right? Interest rates could be the single biggest risk to the housing market itself right now, right? But just realize even Ollie Wolfe, our chief economist, was on to basically said, even if rates go up, the drop or flattening in home prices is a far cry from the crash that we saw back to the Great Recession. Okay. Right now we're looking at interest rates around 3%, right? We've heard from the Fed just recently came out in the past couple of weeks and said, look, they've been propping up this economy through the pandemic, right? Buying a lot of mortgage-backed securities, doing other things. They're going to start to decrease some of that activity over the next year or so in a gradual kind of way. So we may see rates that are going to continually creep up all through next year. I understand there's lots of people out there right now, when you look at other economic factors, rates may not increase and they may actually go negative. That remains to be seen, but let's just focus on what we think is probably the most probable to happen, right? This is what these projected rates kind of look like. Okay, keep in mind, even if they get up to this 3.5, 3.7%, realize historically still incredibly low, but those will definitely decrease the amount of affordability, right? So just looking at a $400,000 mortgage at 2.7% rate, you're talking about $1,600 a month. If that creeps up to that 4%, you're talking about an increase in $300 a month, right? That's even if the price stayed the same. We know that prices are going to continue to increase next year. So the moral of the story is, if you're a buyer and you're waiting for prices to come down, don't wait, right? The longer you wait, the more things are going to cost you. Prices are going to continue to increase, and so is potentially the cost of your money. You're going to get a double whammy. So I would not wait. Okay. Keeping in mind, still people are asking, is this still a good time? They think the market's overinflated or whatever. I think we're still going to see some strong appreciation over the next few years, because I know we're not going to build out of this inventory deficiency that we have right now. It's going to take years to get out. So again, back to DS News and several others in the know, home ownership is still one of the fundamental keys to accumulating wealth. It's still a very good risk or hedge against inflation, right? We probably are going to see some stronger inflation headwinds coming. Okay, that's for sure. But together, those two things would definitely put homeowners in a much better position than actual renters, right? We know rents are continuing to climb right now. So I just want to say that too. If you're in your dream home right now, great. If you're not, let me know and I can help you with that. But if you're thinking about other ways, as far as what this market has to offer over the next couple of years, especially considering that rents are increasing, this may be an excellent time to get yourself an income property if you don't already have one, right? Even on a purchase price as little as $350,000, that could net you about $100,000 over the next 5 years. Okay, so keep that in mind. Okay, so just hopping over here to the San Diego housing market here in October, right? Remember, these are median numbers. They're year-over-year numbers. They are the entire county in San Diego. They're all housing types, all price points. When we look at the median sales price, though, we're up to now $750. That's up 15% year over year. Our active market time is still at 12 days. That has not changed. Our sold price per square foot is definitely increasing, and our months of inventory, again, I feel like a broken record, but 0.9 months worth of inventory, right? We need 6 months of inventory for a healthy market. This is really what's driving all of this home price increase. That and the fact that, remember, everything above the line are lagging indicators, everything below the line are leading indicators telling us where the market's going. Well, this is where the market's going. We don't have enough volume. We don't have enough inventory to sell. So definitely going to keep prices propped up, even as interest rates still continue to rise. We'll see what happens with that. But anyway, again, if you have questions about these numbers, if you have questions about what your home is worth, is now a good time to buy or sell, I'm more than happy to answer any of those questions for you. Just reach out, and that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.